What's up, everybody? Welcome to this week's AMA. We have a special guest this week. With us, we have Danish Chaudhry from FMFW. I know you've been around in the space for a long time, Dinesh, so why don't you start with an introduction, your background, your crypto journey while you're here?
Great. Great to be here, Joseph. Thanks for having me. Excited to be on. So yeah, just by a quick introduction, I'm CEO of FMFW.io. It's a cryptocurrency exchange that we started about 3.5 years ago. FFW kind of stands for Free the Money, Free the World, which is kind of our ethos. So we listed Ergo back in 21 and have partnered with the team fairly closely. My background is actually from traditional finance. I used to be an M&A analyst at Ernst & Young, doing that for a number of years. And through, happenstance, when the 2008 financial crisis happened, I was responsible for a lot of the M&A deals, like the Nomura Lehman buyout, the BlackRock BGI buyout of iShares. And as part of that, BlackRock said, "Hey, why don't you come over and work with us?" So I was at BlackRock, one of the largest asset management firms, for a number of years. Working on the equity side of things, and dabbled in natural resources and emerging markets. After a number of years in the traditional finance world, I kind of got the entrepreneurial bug, and started a payment startup. Actually, back in the day, we kind of partnered with Ripple, early days, to do remittances north to south of the border. And then started a couple other businesses within the crypto space. I'm obviously, naturally, being in traditional finance, you get to have an interest in the crypto space as a new emerging technology sort of thing. It's been onward since. So created a couple of businesses, sold them, then started an exchange and been involved since.
Awesome. So, coming from the TradeFi side into the crypto side, I imagine that's quite a shift. There's a lot of screaming and just general madness in the industry. What are your current thoughts on the state of affairs? How's the state of the union in the crypto industry these days?
Well, so back in the day, crypto was like an emerging asset class. I guess you could still call it an emerging asset class, but it was 100,000 people interacting with Bitcoin back in 2010, for example, and now there's 50, 60 million people. So not so emerging then. We kind of got in mainly because, growing up in the world of finance, I always was enamored by the Wild West of the days in the 60s and the 70s, stock sales, all that stuff, unregulated, everything is happening, buy, sell, all that crazy stuff that was happening. And the crypto industry reminded me of that in the early days. And it's still somewhat like that, but I think now it's maturing up. But now we're in a position where I think, we've put a lot of trial and error stuff behind us. I think the bad actors have come and gone. We had back in 2017, we had BitConnect and all this sort of stuff that kind of came about. Then people wised up to that. And then, all of this 3AC and Celsius and FTX came around, and, that kind of took a big toll on us, especially from an exchange perspective. We saw, a huge decrease in retail volume and user confidence sort of thing. But now I think we've started the year strong. I think over the course of the next year or two, we'll see more robustness come into the industry. I think, regulations are always a good thing as long as they're not hindering, innovation and propagate, innovation and stuff. I think, more and more jurisdictions are kind of wisening up to the asset class in the industry. So like Dubai is a big crypto center now. Portugal is a big crypto center now in Europe. Although the US kind of took a few steps back in classifying. We had the whole Top Shots thing yesterday where they said, Top Shots may or may not be a security sort of thing. So US is clamping down. But I think, out of all of it, the industry will come out to be a little bit more resilient. Checks and balances are always a good thing. You can't just run a $18 billion hedge fund with no controls in place and then, poof, it goes. And then you're starting another exchange sort of thing, kind of like the 3AC guys. So hopefully, through all of it, we've had enough learnings, and I think most people welcome some sort of checks and balances that will allow us to kind of grow the size of the pie, essentially.
So from where you said, what's your insight on the whole U.S. Gary's SEC's march forward this last few weeks?
Yeah, I think it's very interesting, right? We thought it would be, he would tackle more the Alameda FTX situation first. Somehow that's completely been skipped over, and now he's going after everything and everyone. I think it's kind of like a retaliation play, where they're going to, authorize custodians, which kind of limits exchanges, all this sort of stuff. I think what's really needed in the industry is a new set of rules and regulations, which encompass, DeFi, which encompass centralized exchanges, which encompass basically the structures that we're built on, which encompass, blockchain and all this sort of stuff. We can't shoehorn our industry in the rules that were created in the 80s. Right. So I think that needs to evolve. I think what's currently happening right now is Gensler is still looking at rules he created for traditional capital markets back in the day that were enforced and putting us in the same box. And I think that's not the right way forward. I think an evolution of regulation needs to happen so that, it can protect the industry while at the same time protect the consumers from bad actors, sort of thing.
All right. So in terms of centralized exchanges, what would you say makes your outfit at FMFW different?
Well, good question, actually. I mean, at this stage, most centralized exchanges are almost fairly similar. But the number one thing I'd say, and not to throw shade at my partners and the rest of the industry, is the number one thing we kind of do, we protect the consumer. We don't rehypothecate funds. Our custody is completely one-to-one matched, untouched. So we don't lend out user assets. We don't use them for our own trading or anything. So, our users are siloed and our users are always protected in that sense. So I never thought that would be a positive point starting 2023, but here we are. But I think that sets us apart. I think as far as, our platform itself is concerned, one of the advantages of our trading platform is we plug into a liquidity provider that runs about 15% of global daily volume, right? So what that means is our liquidity provider services 5-6 other large exchanges, so our users can match trades to a very deep and sufficient order book, which is fairly beneficial to a lot of our traders. And our matching engine is second to none, sort of thing. And outside of that, I don't want to really kind of jinx it, but going strong for the last 4 years, and a platform technology that's been going on since 2013. Our custody is one of the few that hasn't been hacked so far, or has had any issues. And again, these negatives I'm using as positives, sort of thing, but it's that day and age, sort of thing. But yeah, I think robust security, consumer protection are kind of the two things that set us apart these days.
Well, if you could dive into that just a little bit, we might have some new users out there that don't actually know what rehypothecation is. Could you cover that? Why is that important? Why should users care? Well, rehypothecation would really mean a user deposits their funds. And obviously how a centralized exchange kind of works is, just for a very layman's perspective, is a user deposits funds and the funds kind of come into our custody. And our custody is a centralized service that hosts all the assets. All the assets are mostly commingled in the sense that, you deposit a Bitcoin, I deposit a Bitcoin. It comes through different addresses, but it's held within the same custody system. So there's no difference between your Bitcoin or my Bitcoin. And that asset is reflected within a centralized exchange. So within your deposit page, within your asset list, will show, hey, Joseph submitted 1 Bitcoin, so that's what it shows. Trading happens, and that's why centralized trading is very fast and efficient, because it happens electronically. It's not on chain, and then settlement happens. Once a trade happens, then settlement happens, and the assets are crossed within custody. So there's an internal ledger of your assets that's kept.
that's how a centralized exchange kind of works. But what generally has happened before, and why FTX happened also, is like, all the users' assets were kept in custody. And then the centralized exchange decided to rehypothecate these assets to give out loans and earn extra yield from your assets or my assets, giving them out to risky businesses such as Three Arrows or Terra or whatever sort of thing in return for a yield. So it's kind of like how, in a very basic sense, a bank operates, where your deposit is used to loan out somewhere else. They might lend it out for 5%. Give you 1% and keep the spread in between. That's basically what these traditional these other exchanges were kind of doing, where your Bitcoin was lent out for an 8% return. You would get 0.5% of it, and they'd keep the spread. But the issue that the real problem there was they were lending it out to risky actors within the industry. So, they'd lend it out to hedge funds, they'd lend it out, they'd trade themselves, and they'd, kind of utilize it as if they were own assets, which is wrong, which isn't segregation of assets, right? So traditional banks can do that because the controls in place allow them to segregate assets, and, have one-to-one backing. Whereas the actors that we saw last year were lending them out without any backing. And so when, for example, a user in FTX deposited $100,000 that got routed to Alameda, who was trading it on their behalf without the user's consent. When Alameda lost $100,000, they didn't have anything to back it up, so the user didn't have any money. So that's why when the bank run happened, there were supposed to be $10 billion in assets. People could only take out like $3 or $4 billion, which means the rest of it was lost in the market. So rehypothecating user assets is something that we don't do, where your assets are kept as your assets, and even though we might be losing money by not earning a yield on them, we kind of keep it safe and secure, so that we're also not putting anything at risk. So in a long and short way, that's how it kind of happens and has happened previously.
Good explanation. I mean, banks have a lender of last resort. Crypto industry,
Exactly.
So what are you looking forward to in 2023? We've kind of came through a rough year in terms of the industry as a whole. So how do we pick up and move forward from where we are?
2023, I think, is going to be 2023, 24 are going to be really interesting years within this industry. I think what I'm really looking forward to is, having been in the industry for the past 10 years, I'm looking forward to a lot of, and I don't want to call scams or whatever, but I want to call non-businesses kind of disappear, hopefully. Yeah. I mean, I want like a lot of the scam businesses to kind of disappear, hopefully, either by, not having any assets and having spent it all, or by regulation sort of thing. So I think that will concentrate the industry into legitimate businesses that will grow the industry themselves. So I'm really looking forward to that. I think from a regulatory perspective, we run a lot of risk right now, especially around the US. But I think if we carry the weight around, the Dubai regulations, European regulations, and wherever else is coming around that's a little bit more friendly, I think we will see that wave kind of take over. So regulatory wise, I'm looking forward to proper rules that propagate the industry and enable innovation. From a business's perspective, I think, a couple of more businesses need to go bust and kind of, disappear from coin market cap sort of thing. And kind of enable users to access legitimate platforms rather than scam platforms. And we're looking forward to growing the exchange as well. We're releasing a new mobile app, trading app. We're going to be releasing a lot more staking options, etc., and just kind of, stay in our own lane and kind of evolve gradually, and not spread ourselves too wide, too thin, where we've got a stadium named after us, or we've got a basketball team or anything, but slowly but surely kind of grow and evolve in that sense.
All right. So is there anything that we haven't touched on before we kind of throw it to the community?
No, I think we're all good. I think my team has a special, I guess we're promoting Ergo, obviously, and there's traders who are trading Ergo, get a 70% discount. And I think there's some sort of discount code somewhere that my team has pushed through, and users who want to trade Ergo can do that with discounted fees for a time period.
Sure. Yeah. All right. So let's start with community. You're pretty brave to take some.
This is always the precarious bit.
All right. So we start with Wendy Moon. She says, Dinesh, as you're interested in free money, how important do you think decentralization is in regard to what, you think about Ergo or other cryptos? We certainly have seen, I guess that's kind of a spectrum.
Yeah. I think, I always find it a little ironic in the sense that we're called Free the Money, Free the World, but we run a centralized exchange. So it's a little juxtaposition on that front. But I think we still, we are developing our own decentralized exchange as well. So people will be able to trade on chain. Because I think that's where the world will go. I think decentralization is very important. I think it's the way the industry is built, and it's the way the industry should move forward. And I think centralization has led to more risks than more positives in that sense. Some of the best DeFi protocols obviously are completely decentralized, and the innovation there is it's amazing. And I think from a centralized perspective, outside of just efficient and low cost trading, I don't see why you would need a centralized party to earn yield on your assets when you can do it from a decentralized way using Yearn or Curve or whatever sort of thing. And yeah, I think like something like Ergo is really fascinating. And I think that's how I hate blockchains that raise hundreds of millions of dollars at billions and billions of dollars of valuation, because that's just a way for VCs to extract value from the community. And I think that's not the way forward. I think I've launched a couple of fair launch projects, and I think that's the way forward, because it's for the community, by the community, and the users kind of have an equal stake, and there isn't really some venture capital fund kind of benefiting off it. And so I think Ergo's on that right track, where it was 95% of it was public allocation, and I think it's proof of work, and it's the way how I think most change should kind of go.
So if you don't mind, I'd love to dig into that a little bit. Ramping is always kind of like the bottleneck towards shifting towards more of the decentralized exchange. What do you think the future of that looks like? You have kind of a unique perspective from where you are on the centralized exchange side. What challenges do you? Yeah, ramping fiat, either banking.
Yeah, I think so. The main blocker really is the on ramp and off ramps, right? But I think as we move towards a world where the assets can be accepted as payments or collateral or whatever from the other party, I think we will kind of see the need for on and off ramps kind of diminish and have it less of a bottleneck. Right now, we've got a few fiat partners that enable you to. And again, the fiat on ramp is a banking issue. There are banking partners that allow you to interact with crypto very, very, very easily, but majority don't. And I think as we kind of move into a world where people will take USDC, USDT, Bitcoin for payments, I think that on and off ramp situation kind of diminishes quite a bit. So, part of a lot of the world south of the equator, in certain places, it's like saying, have you heard of M-Pesa in Kenya, for example? It's basically mobile minutes that people trade with, and they can use it for paying for the milk. They can use minutes, and they use for phone calls or whatever. The entire economy runs on M-Pesa, which is basically just digital minutes sort of thing. And I think that's where the world will move on to, where us as an exchange, we make our payments in USDC and USDT, and that entire circle kind of fulfills itself. So I think as we evolve, I think that on-ramp and off-ramp chokehold will also kind of loosen up sort of thing.
So P2P ultimately kind of disintermediates that.
Yeah, for the most part. Yeah.
Nice to see. All right, we have a question from Viller. How do you think projects can reach mass demand if there's a good product? Some projects struggle to attract new people. What advice would you have? Let's say for Ergo specifically.
Yeah, I think it's, Ergo with the smart contract platform is more, I think you build solutions that people need, because in speaking to developers and users, they often develop products that the developer needs and not really what the end user needs, sort of thing. So I think that is one of the key things to bear in mind. I was just speaking to a couple of other projects that were pitching for investment, and in using the product, I, as an average retail person, couldn't use it, but they're like, "Oh no, we built it because we thought this was the best and all this sort of stuff." Like, but you have an engineer's mindset, you don't have a retail person's mindset, sort of thing. So I think that is the mindset that people should go into building solutions, and I think really focusing on. I think the number one use case, obviously, for most crypto, actually, I think is payments, right? I think I come from a payments background as well. So it's like payments is the number one thing that they solve, and payment savings, various transactions like that, and those are the solutions that I think if you make it super simple for a person to use, I think people will flock to it. And the number one thing I think is the usability element, right? Like as in right now, there's maybe, I think, even though I'm in crypto and let me look at my non-crypto friends and people who are still interested in crypto, maybe 5% can use MetaMask, if that sort of thing, right? So I think that usability element, the UI UX element needs to be solved so that when a person is interacting, it's just you and I interact using, let's just say an application built on Ergo or something that uses Ergo smart contracts. Shouldn't even know that we're based off Ergo. Shouldn't even know that we're on Ethereum or anything sort of thing. It just happens, and we know that it's safe and secure, and it's final, and all the benefits, the finality and everything, all the benefits of using a blockchain are there. But at the same time, you and I don't know what in the background is, sort of thing. So, for example, if I'm making a phone call, I don't know how my packets move from my phone through the cell tower to the central server to your phone, sort of thing. I don't need to know it, but I know I'm making a phone call, and I think that's what we kind of need to evolve into eventually.
Yeah, in the Ergo ecosystem, we've got a payment mechanism on mobile called Ergo Pay. That's probably our simple, the UX. That was a huge. Let's say improvements that could be made in terms of bringing on grandma.
Yeah, exactly. Right. You want every time when somebody develops a product, I'm like, dude, imagine if your mom and dad can use it, or if your sister can use it, or that sort of thing. If who knows what private keys are, who knows whatever it is. Yes, we know that for security, everything, but ask somebody how to interact with something that's a little bit more complicated, they wouldn't know it. So yeah, grandma's the ideal product person you want to target.
All right, so looks like we have a question from Hash It Out with CW. He says, lately there's been a call for proof of reserves. What are your thoughts on proof of liabilities as well, being a better insight into the health of the central exchange and counterparty relationship?
I think it's I don't think proof of liabilities might give you a wider picture. So for example, our liabilities is nothing to do with our loans or anything, but our liabilities could be business loans that are kept against the business, not consumer deposits, right? So consumer deposits are a whole different thing. So, if I'm expanding the exchange into a new territory, I take a business loan against assets that are business assets, that is my balance sheet, etc. Or my liabilities could be, my bills and receivables that are supposed to happen next year. Or my liabilities could be wages. My liabilities could be a bunch of things from a business perspective. So I don't think that gives you the entire picture or it could be commingled. But I think, you could say, liabilities against consumer assets. But then again, if you're already going down the route of saying, oh yeah, give me liabilities against consumer assets, that's completely wrong in its own self, because that implies that you're lending out user assets or doing something else with user assets, right? So proof of reserves is the right way to go. And you should say, if you've got $10 billion in user deposits, there's $10 billion over there, sort of thing. So liabilities does not always show you the right picture.
Yeah, I mean, that is true that you have, consumer liabilities. You're already doing some funny business potentially.
Exactly.
With there. It's an interesting point.
Yeah.
Let's see. From Luca D'Angelo, he said, in your opinion, will crypto become a superset of traditional finance or more complementary?
I think it'll be a lot of crypto still functions in traditional finance elements, right? And aspects. Like it's like, when you go into trading, options, futures, traditional spot, everything's traditional finance based sort of thing. When we go into, using DeFi solutions, so like savings, lending, borrowing, that's again traditional finance. Or what we call traditional finance. I think it's that could be the overall umbrella, but it's a complementary asset class to the fiat and whatever derivative based asset class that we know of traditional finance, like real estate or bank deposits, whatever you want to call it. Crypto and blockchain allows you to what I really love about crypto and blockchain is coming from a company such as BlackRock, which is highly centralized and it's everything's centralized, which is such a big behemoth. I as a fund manager, whatever, would access billions of dollars, and have opportunities which the average person would never have, right? They could never go out and lend their money at 7%, or they could never go out and access some sort of swap or borrowing facility or anything, but they had to go through their bank, who would then come to another lender, who would then come to BlackRock and that sort of thing. So crypto cuts through all of that and allows us all to interact on a level playing field and build applications that other people can build on top of and kind of offer services in that sense. So I think crypto cuts through the fat, or blockchain cuts through a lot of the fat and the layers that are very old and archaic. And I think it'll be a complementary solution in industry to what traditional banking and finance that we know of is. Like grandma will still go to her building society down the street, but her grandchildren will say, hey, why am I going to this old archaic bank that's shut on the weekends and I can't make a payment, but I'm going to, start using this mobile wallet that allows me to save and yield and all that sort of stuff. So it'll be complementary, I believe.
All right. Question from Oman13. Any concerns about the SEC in terms of their moves in crypto?
Yeah, I mean, it's funny how I always keep saying I think we need to move away from the U.S. standard. Yes, most of the flows come from the U.S., but I think we need to kind of stop looking at the U.S. as the flag bearer for all regulations. But that being said, I think yes, currently the industry is at risk because whether or not it passes or not, but the SEC could deem everything a security, and without it being officially law or passed through Congress or House or whatever sort of thing, that still has a negative impact on the industry. Like people won't either. There'll be like a huge brain drain where people leave the U.S. and go to Europe and Asia sort of thing, which may or may not happen. But it will stifle innovation, and I think we're currently at a state where, because we're vulnerable and everybody's still reeling from the $32 billion in FTX and the 18 billion from 3AC and Terra, et cetera. Because we're in a vulnerable position, I think the SEC is kind of going for the jugular. But I think, we can persevere and hopefully come out of it positive, I think.
And last question is going to be, what are your thoughts on the upcoming MiCA regulation in Europe?
Yeah, so good question. I was actually, I think it's a interesting regulation. I think it's a something that's still kind of being mulled over. It hasn't been passed yet, but we'll see. We'll see how it evolves. We were just debating about MiCA the other day. I think it's a proposed legislation, but we'll see how it develops over the next year, sort of thing.
All right. Well, it looks like our time's rolling over. I appreciate you coming on, Dinesh. Anything you'd like to
No, this is great. Thank you for having me, and yeah, glad we got to chat. And excited about the community coming trading with us. And yeah, excited to partner with you guys even further in any which way possible.
All right, I'll let you know on that front.
Perfect.
You have a good one.
Great. Thanks.
All right, looks like.
Okay, so I can log off now.
You can log off.
Oh, great. Okay, perfect. Great. Thanks for having me. Speak to you guys. Take care.
All right, Alex, you there?
Yep. How's my sound today?
It's about as good as usual, buddy. How are you?
I'm good. Spent last couple of hours checking Ergo hack projects actually, and it seems very impressive set of projects.
So, yeah, I'm in trouble, judge, buddy. It's not going to be easy, and there's a lot to comb through. So hopefully this time I'm faster than last time.
All right. So, how many judges? Can you share any information about the judging process?
Well, at this point, I'd have to look. I know that I'm a judge. It's going to take me time to dig through everybody's documentation and code, and there's some videos to drag through. So, it's great to see that type of engagement and content, but, now the work begins, right?
All right.
All right. Yeah. So what's on your side this week?
Mostly participated in Ergo hack. I am out of contest, so I haven't sent results. Even I just published them on GitHub and Twitter. So maybe I will write a quick document, but currently there is only README in the GitHub. So actually, it was pretty hard Ergo hack and very involved because Amitabh wasn't capable to join. So I alone did a lot of stuff actually. Still a lot of things to polish. But in regards with protocol and the node development, a lot of stuff is going on as well. Starting to prepare a new node release candidate 508 with some fixes and small improvements. And going to extract more code for bootstrapping with utexo, set snapshot, and so on. Aside of that, had a lot of conversations with mining pools in regards with 507, with some Ergo hack participants. Sorry. Nothing lost, so it seems I switched off my mic at some point.
It's all right, we got most of it.
All right, so going to update a couple of Ergo forum topics based on experience got during the Ergo hack. So in particular, this about checking signatures in on-chain contracts, right, and doing also corresponding signing off-chain to get signature successfully validated in a contract. It's used in Rosenbridge, but the guys didn't provide updates on the forum after the initial proposal by Amitabh, sadly. Going to fix that. And today also guiding the Kenyan folks we are interacting with about doing the first multi-sig transaction for the cooperative, which is using multi-sig wallet for joint control over the cooperative fund. So they have the wallet deployed already, and we are doing the first spending transaction now. So lots of things actually, very different kind.
Anyway, CW dropped the answer to your question. Looks like this Ergo hack, there are 5 judges, myself, Mark Glasgow, Anon BR, Louis Vatra from ErgoPad, and Ilya from Spectrum.
Oh, nice team. So have luck with judging. It's a very hard process. And this time it would be especially hard, I guess, right? Last time it was hard also. Actually.
No, it's definitely not always the easiest task. There's outstanding for you in terms of chain cash. You know what it is, why that potentially is important. So could you give us a brief overview? I know that you have the description in the GitHub, but sometimes it's nice to mouth.
Yeah, so I think I will do a video on that. Need to summarize information, but in short, so chain cash is an attempt to do something alternative to alternative stable coins, right? And also do a monetary system on top of cryptocurrencies with elastic supply, right? So you may have supply according to economic demands and risk profile chosen by economic agents in the system. And then to implement this in chain cash, we are using quite old idea existed before blockchains and then actually forgotten from early 2000s. So it had some local success in Japan, as far as I know, like 20 years ago. So it's an idea of spender-signed currency, where each banknote issued is collectively backed by all the spenders of the note, right? So when you are spending money, you are going to back them, right? And on top of this simple idea, we built chain cash where you can accept or reject incoming payment based on its history of a note or notes you are proposed to accept. So each note is collectively backed by reserve or trust in previous spenders.
All right, appreciate it. We have a question here from Augustus Kent. Do you think Ergo will have more use and utility for financial applications, smart money, etc., or non-financial such as Blitz, TCG, audio NFTs, supply chain logistics, etc.?
But NFTs also kind of financial instruments, right? Usually, so kind of collectibles.
Yeah.
Right, and so for me, cryptocurrencies, public blockchains, let's say, always about financial applications, right? So I saw many attempts to build something not so financial, right, on top of blockchains, and all the attempts I've seen failed. And I think, well, it's because, usually, blockchain is a very inefficient system, right? We are talking about distributed system. So it's fully replicated ledger, replicated across hundreds or thousands of computers over the internet. Right, with not so efficient networking because of its peer-to-peer nature without hierarchies and so on. And then, on top of that, usually if you are building something not so. So you are building something where this is not critically needed, right? So, the trustless nature of the replicated ledger, it's probably not feasible, just right. So, but better to build some small-scale distributed system, right? Maybe BFT consensus or just centralized database or something like that. And anyway, so if you are not building anything financial, right, on top of blockchain, so you are doing something different, you need to think about economics, right, of your application, because anyway, you need to pay miners, right? You need to pay the network for this full replication, right? For maintaining the ledger, maintaining the network. So it's not coming for free. Then you need to pay for that. Then your application will include financial components, right? At least. And then probably the whole application would be financial in some sense, at least.
All right, so we've got another question from you, from Hash It Out with TW. He says, Kushti, can you provide a quick update on what our friends from Kenya are up to? You mentioned multi-sig for a co-op. Anything going on there that you can discuss publicly?
Not sure I can discuss this publicly, but after testing multi-sig wallet, we are going to test XLA, right? So to test loans. And so ideas that the loans will be received by cooperative, right, in the name of loan recipient, right? But initially cooperative will get it and will have joint control over the funds, right? And then the loan will be first paid back to the cooperative with some interest, right? And then cooperative will pay it back. And now in our case with no interest, right, at least for the first loans. Then after some time the cooperative should be self-sustainable, right?
Mm-hmm. And it might be worth mentioning that that if there's any type of NFT projects out there, or users that want to perhaps create a partnership and donate a portion of their proceeds towards that cooperative, bootstrapping a treasury would certainly help them. Last I heard, there was over 150 people involved that were interested in potential access to a new financial system. So I think as a community, that's certainly a great test bed for like real world application being useful off chain. It's exciting. All right. So next question: what do you think AI's biggest impact will be on Ergo or crypto, probably long term. Right now, it seems like there's a lot of shit coining around it, but it's always an interesting idea with the kind of green. So what's your thought on AI and crypto, Alex?
Oh, so I don't know, actually. Yeah, so I don't know. So we can talk about some maybe long-term dreams, right? When maybe AI would use cryptocurrencies as kind of a mechanism, right, to estimate its own performance, right? I mean, so if we cannot define what intelligence is, right, in generic sense, then maybe AI could be just an economic agent, right, on the blockchain. Right. So yeah, if it can pay network fees, right, and do some economic activity on top of that, so successfully in the long term, then it would be kind of intelligent in economic sense, right? Which is maybe an interesting concept, but then it will raise a lot of questions, right? So I mean, how humans are better than the machine in this regard? So are humans just economic agent or something more? But that's very long-term thing, right? So if we are talking about something short-term, I don't know. So maybe AI can improve or maybe disrupt, let's say, the trading field a lot, right? But maybe not. So I'm not very proficient in trading.
Okay. You're not an economic agent, Alex.
Every being, right, is an economic agent in some sense, but not just, right. Otherwise, it would be replaceable with AI, probably, and also sounds pretty insulting, right, to human being, probably, right, to just reduce it to economic activity. Yeah. But so for AI, maybe thanks to blockchain, it could be possible, right, to be non-distinguishable from human economic agents after some time in regards with certain activities.
Yeah, but I mean, one potentially interesting use case in terms of AI, in terms of proof of work, would be using it to try to balance energy markets in terms of infrastructure deployment. Right, you have lower input costs in some regions and the ability to track and deploy infrastructure and kind of balance pricing broadly would be an interesting concept anyway.
Sounds good. And there's also a kind of economic activity, right? So AI maybe could hire, even human miners, right? So basically buying mining contracts, right, around the globe. And then, trying to get profit from it, to improve itself also on the way. With profit got from economic activity. But yeah, there could be also other applications. So as far as I know, currently there are a lot of books already written by ChatGPT, right? Or with the help of ChatGPT. I heard there are even books how to make money with texts written by ChatGPT, and this manual is also written with ChatGPT, right? So kind of recursive business now. ChatGPT involved business. Then maybe ChatGPT can try to compose texts, right, and sell them on peer-to-peer marketplaces, right, and then find successful niches, right, and do its evolution on top of the blockchain as an economic agent, right, writing texts. So somehow finding which are making sense, right, at least economically.
It seems like we're going to be in that trend for a while, where a lot of these machine learning tools are kind of, I don't know, they create this like new recursive paradigm. It's fascinating.
Right, but yeah, also a lot of new risks and dangers on the way, right?
That's the truth.
So, how to distinguish, meaningful text from something written by a bot without any understanding of some field, right, without any experience in that field.
Welcome to reality, man. Stranger than fiction. All right, looks like, let's see. You've got an invite here to talk on Twitter if you'd like. It looks like there's going to be some NFT exploration tool talk. So, any chance that you'll show up on the, what are they called, Twitter Spaces?
Oh, so for Twitter Spaces, I need to check. So, last time it wasn't friendly to Linux at all.
No, I think you probably have to get like an Android emulator and then put Twitter on there, and yeah, not fun.
All right. So even for Android, so last time I tried, so it wasn't possible to get an application running without Google Store. So yeah, no any APK published. So need to check. Maybe it's improved now.
All right. Well, anything else that you'd like to cover? It looks like we've rolled over our allocated time. So anything that cover and close?
I don't know. So maybe you want to answer some questions now?
Sure.
Yeah, I answered all of them. And
sure.
So in regards with development, so there was a pretty good chat yesterday, and yeah, we have Ergo hack. So probably it will be covered in a Sunday video, right?
Yep, I'll be putting that together tonight. Every Sunday we have a weekly developer update. We also do this, and there's a variety of other stuff that's coming out of the community these days. I've seen more and more community-driven content videos, which is great to see.
Oh, nice. So looking forward to it. So any questions you would like to answer?
Sure, I'll grab one. Looks like FC says, can GeoCW give an update on top uses of Ergo tokens, like Grand Gamut, for example? What our top projects creating token activity. So right now, if you have Erg, there's a variety of decentralized applications in the ecosystem. We do have the ability to get into the NFT side. We do have two auction houses, or two marketplaces anyway. One of them is an auction house. One of them is more flat fee oriented. That's Sky Harbor and Ergo Auctions. If you want to potentially, act as a seed funding mechanism for blockchain development, you have ErgoPad, which periodically brings projects to market, and that can give you some early exposure there. You have Spectrum, which allows an access to a variety of tokens and projects, and sometimes strange coins if you look on the unapproved list, and so you have the ability to swap and move around assets. There's a variety of DeFi protocols that are kind of coming to fruition that allow you to, act as the lender or borrower. Some of them pool lending, peer-to-peer lending, allows people the ability to get access to liquidity, which is pretty neat primitive. As Rosen Bridge comes online, we'll probably see more assets moving into the ecosystem. We do have, some privacy tooling out there if people want to, let's say, take their digital asset and break the linkability between the user and the fund itself. So we've got a lot of unique projects in the ecosystem. I'm sure I missed a couple. We do have a community-driven website, sigmaverse.io. We also have another one called ErgCube, which has pretty broad information, and probably can give you a better overview of the ecosystem than I can, at least in this format. So I hope somebody in the chat throws in a link for either one of those. That would be pretty helpful. Ergo is still developing ecosystem, but there's a lot of unique primitives that are coming into place that I think long term are going to be foundational. Anything to add to that, Alex?
So there are also some completely useless meme tokens like Comet. So sometime I'm losing my precious ergs on that crap. So I heard some people also losing their precious ergs. So that's complete nonsense. But they also did some stuff to lose money even quicker, like lotteries. I participated in a couple of them. Lost even comets after all. So if you want to have really Degen experience, you can consider such an option.
Yeah. Let's see. Last question of the day. Can you guys explain trading bots on centralized exchanges and how that can increase liquidity for users of centralized exchanges? Sure. So, usually what a grid bot does is it allows you to set buy and sell in a certain range, and, you capture kind of some of the meat in the middle in terms of volatility. At least when things are trading sideways, it can be pretty profitable venture. One thing it does do is it does create more liquidity on centralized exchanges, which increases volume overall, and also tends to add to the depth of order books. But on the central exchange side, you are losing custody, which is not always advantageous, and you also are trading in an environment with fees, and that's sometimes adds up. Let's say. What's your take on that, Alex?
So I think one particular problem with Ergo in regards with centralized exchanges, as well the lack of liquidity because people whether buying and holding, right? Market selling, right? As some miners are doing. And then, in both cases, order book is thinner, right? It's not improving. Because of market buy and market sells, a lot of fluctuations, right, in pricing, and then you can earn from it by providing liquidity, right, via grid bots on Coinex. There is AMM LP liquidity pool. Like Uniswap, right? Sometimes there are some kind of smart. How's it called in Huobi? Smart. So it's kind of a grid bot, but with auto parameters, so not manually chosen. In any case, you then put liquidity into order books, right, and you are getting profit, especially when price is moving sideways. So it helps then to all the ecosystem, right? Because improved order books are helping new buyers, right? And new sellers, new miners also. Right, and then it's leading to more liquidity being appeared in order books and so on. Right, so good things after all.
Yeah, that's a net positive. It's people that are willing to take risk and seek reward. That's something to potentially play with. But manage your risks, trade well. And, it's also, there's always a question of, keys, right? Not your keys, not your crypto. Sometimes I'm both, proud of our community in terms of respecting that, but it also is not always the greatest in terms of trading volume because, that's somewhat of an adversarial environment where you can't really see what's happening on the other side. So everybody has to kind of balance that risk reward scenario. It would be nice to see larger liquidity provisions from the community. A lot of the times that's handled centrally by projects, and that's not really something we do aggressively at all, which has its pros and cons, I guess. All right.
And I would recommend miners to not just market selling, right, but providing liquidity via grids, right? Maybe just one time grid, but it would be better. Even a few manually created orders, right, would be more profitable, maybe potentially, right? You can, for example, sell some portion of mined ergs to cover electricity costs, right? And then put the rest at a higher price or something like that. So it actually helps, right? Everyone. I mean, improved liquidity in the order book, and also potentially more profitable also than market selling all the time. Even without trading, right? So some simple strategy could be considered. So if price is above average, right, for some time period, then market sell everything. Otherwise, so if price looks low, collect something, right, for a moment when it will be suddenly increased a lot. So something like that actually would help, I think, miners as well.
Yeah, I wish there was out there on that front. There's a lot of good content in terms of mining setup, but in terms of profitability strategies and trading strategies and kind of setting yourself up as the initial liquidity provider of an ecosystem, I think that there are a lot of things that will already exist or yet to be created, especially as DeFi kind of rolls out in the ecosystem. So I hope that's something that we see more engagement in, because right now, it's kind of rough time for miners post merge. Things still need to consolidate, balance a little bit.
Well, actually, I think, SecUSD, right, and the other DeFi tools would help a lot miners in fixing profits.
Yeah. So that's something to discuss and hopefully educate people about, as an ecosystem.
All right. Anything else to discuss?
Oof. I'm good for now. I got to refill my coffee, get some food.
Oh, sounds like a good plan.
Yeah. I appreciate everybody's time. Thank you for joining, everybody. I hope everybody has a great week, and I'll see you next time.
Thank you, everyone. Bye.